Understanding Fibonacci retracement. Fibonacci retracement levels are horizontal lines that indicate the possible support and resistance levels, where the price could potentially reverse direction. The first thing you should know about the Fibonacci tool is that it works best when the market is trending. Fibonacci retracement levels work on the theory that after an impulsive move in one direction, the price will pull back or retrace back before creating another impulsive move. In order to apply Fibonacci levels to your charts, you'll need to identify higher highs and higher lows swings. Or you will need to identify lower highs and lower lows swings in the case of a downtrend. In the previous video, we already discussed how to identify those highs and lows swing points. How to apply the Fibonacci retracement tool on your chart. Click on the icon on the left side. Here you can see the Fibonacci retracement tool. Select Fibonacci retracement. Connect one higher low to the next higher high. Now you can see those Fibonacci levels plotted automatically. Don't forget you have to start from the higher low to the higher high. A higher low can also be called a swing low. A higher high can also be called a swing high. If you use candle charts, you should draw from the low of the candlestick wick to the high of the next higher high candlestick wick. The most important Fibonacci retracement level includes 0.382, 0.5, 0.618, and 0.786. Those levels are important because there is a chance that a price will stop and reverse at one of those levels. We can see that price found some temporary support at Fibonacci retracement levels. If enough market participants believe that a retracement will occur near a Fibonacci retracement level and are waiting to open a position when the price reaches that level, then all those pending orders could impact the market price. One thing you should take note of is that prices won't always bounce from these levels. They should be looked at as areas of interest. For now, there's something you should always remember about using the Fibonacci tool, and it's that they are not always simple to use. If they were that simple, traders would always place their orders at Fibonacci retracement levels and the markets would trend forever. So, I hope you understand everything. See you in the next video.